Hey, welcome back to YT Finance, and today we are talking about a CFA, which is a Chartered Financial Advisor who is basically calling out Workhorse stock owners and calling them stupid. I will be refuting most of his points throughout this video as we read through his article. Remember to subscribe, leave a like if you enjoyed the video, comment down below if you have any questions, and let's get into the article. To be fully transparent, I barely own any Workhorse stocks because I am waiting for the United States Postal Service contract winner to be announced from now until the end of the USPS fiscal year, which is September 30th. If the contract is further delayed, the contract will be announced at the end of the calendar year when the company's production begins. I personally think that the USPS contract will be split between Workhorse and Oshkosh Corporation, whose stock I do own, with the majority of the United States Postal Service contract being awarded to Oshkosh. The CFA starts out by stating that Workhorse remains the weakest EV stock company in the United States and that they have one of the worst management teams that he has ever encountered. I will not refute that they have one of the weakest EV manufacturing plants in the United States, but I will say that their management team is not weak, and that is a preposterous statement. Towards the end of my last video, I mentioned and talked about Workhorse's new CEO, CFO, and COO, and some of their directors and management, and how Workhorse has an array of prestigious senior executives that held positions in high-end companies like Procter & Gamble, Cisco, Texas Instruments, and GE Aviation. Now, if he was referring to regular management, those people will all be filtered out because their upper management does not play around. The author goes on to say that analysts now forecast oil demand to fall after 2027 and 2028 as the popularity of electric vehicles rises. He also says that electric vehicles are one of the greatest growth industries that he currently tracks, and I cannot agree more. So we definitely agree on that point that EV stocks are the future. I think that the only thing that could stop electric vehicles in their tracks are probably hydrogen fuel cell vehicles, just because they're more efficient. He goes on to say that great industries can hide terrible companies. As investors look for the next Tesla, tremendous and awful companies alike can find themselves washing up cheap financing. Basically, he is saying that EV stocks are shooting up because investors are trying to find the next Tesla and that some people are investing in bad companies. I agree with him on that statement, but not his reasoning for saying it, because he is referring to Workhorse as the bad company. He says, despite its tough-sounding name, Workhorse has been an utter failure at selling vans. Between 2016 and 2017, the company sold 1,405 electric vans to UPS. Since then, it's failed to sell much more. I would like to point out that UPS was Workhorse's sample target customer base, while Walmart, FedEx, and Amazon are their real targeted retail store customer base, and Workhorse's order from UPS was so little because they were receiving another order of over 10,000 vans from another company. Now here, I think the CFA did an excellent job looking through the financials of Workhorse, because these are the exact same conclusions that I ended up being led to by the numbers. It says, in those 4 years, the company lost a total of $96 million and created $95 million of convertible debt. In quarter 2, the company lost another $131 million on a mishandled note conversion. He adds to this by saying at the bottom of the screen, while I love the electric vehicle industry's growth potential, Workhorse hasn't exactly played its cards right, and I can 100% agree with him on that. They are not very strong financially right now. Then he addresses the United States Postal Service contract by saying that Workhorse supporters could come back at him, saying that they could potentially win a $6.3 billion United States Postal Service contract to replace its 180,000 vehicles. He says the word could is the operative word, which means that it is not solidified that they are going to win the contract. He also mentions that the United States Postal Service has since suggested that splitting the contract into smaller pieces seems more applicable to them. The CFA's position and mine are definitely aligned when it comes to this, because I have said multiple times that Workhorse is not a financially strong company. I have also mentioned a couple weeks ago that the United States Postal Service would most likely split the contract between 2 or 3 manufacturers, with Oshkosh Corporation taking the majority of the contract. The CFA then backtracks slightly, saying that Workhorse may still win the contract, of course, but he's just saying this so he can look back on this article, maybe edit it a little bit, saying that he always knew that Workhorse had the potential to land the contract in the first place if he ends up being wrong. He continues on his contract argument, saying that if the United States Postal Service does split the contract and Workhorse gets a portion, it's unlikely to be highly profitable for any player. I would say that would be relevant to all players except Workhorse, because if Workhorse gets even a portion of this contract, the stock price will increase dramatically, and they could use that and refunnel those earnings back into the company. Then he starts talking about Lordstown Motors, specifically the CEO Stephen Burns, and Stephen Burns used to be the CEO or Chief Executive Officer of Workhorse, and then he left thinking that the company's not going to be that that profitable, so then he forms Lordstown Motors. However, Steve Burns is an innovator and a businessman, so he did not cut ties or burn bridges with Workhorse and instead offered them 10% equity stake in Lordstown Motors. He's also giving them 5% equity on the first 6,000 units sold and 1% on the next 194,000 units sold. And he did this in exchange for two things: one, intellectual property, and two, he got the entire Lordstown plant. Basically, Stephen Burns created his own company and took 90% of Workhorse's greatest asset in exchange for only 10% stake in his company. He's pretty genius if you think about it, because if Workhorse crashes and fails, Lordstown Motors is basically unaffected, but if Lordstown Motors does well, then Workhorse does well. It's a really good business proposition. I have read somewhat conflicting articles about this part. It says that in 2019, Lordstown Motors bought GM's 6.2 million square foot plant in Lordstown, Ohio, earning accolades from the White House. But this is not the whole story. Workhorse actually bought the plant and gave it to their affiliate Lordstown Motors in exchange for 10% equity in the Lordstown Motor Company, where they will build trucks that Workhorse will get paid a 1 to 5% royalty from. I have shown this slide before that says that President Donald J. Trump tweeted that GM will be selling their Lordstown plant to Workhorse. So this tweet from President Trump gives us insight into the deal between GM and Workhorse, then Workhorse and Lordstown Motors. Hopefully that all makes sense. Also, Workhorse will not be selling their W15 truck, which is the thumbnail of this video, and instead, Lordstown Motors will be building their endurance truck. Overall, the truck looks fantastic, and I can't wait. The only problem is it's going to try to compete with the Tesla Cybertruck, and I don't know how it's going to do. So, Lordstown Motors Corporation is scheduled to go public in 2020 via a special purpose acquisition company, also called a SPAC, and that SPAC company is Diamond Peak Holdings. So that is what the company is called. It's DPHC is the ticker symbol. You can buy it right now if you want, and not to mention that Lordstown Motors is also going to have to compete with Chinese EV startup NIO. NIO also has really good prospects for it and big investors, including Alibaba. The CFA writing this article and I are in agreement yet again, saying that Lordstown Motors will have a very successful SPAC launch and that the stock is going to increase as well. So if you want to get in on that company, please do it right now. A big problem that I see for Lordstown's endurance truck is that it releases in 2021, coinciding with Tesla's Cybertruck, and I like the look of the endurance truck way better than the Tesla Cybertruck, but the Tesla Cybertruck is a lot cheaper. It's only $39,900, while on the other hand, the endurance truck by Lordstown is $52,500. So there's a big price gap there. And that is without saying or mentioning other EV manufacturers that are coming out with trucks, such as Nikola with the Badger or Rivian with the R1T. Honestly, I like Nikola's Badger truck probably the best out of all of them, and then Lordstown's endurance truck is going to come in a close second. But it's very pricey compared to these other competitors. The CEO of Lordstown, Stephen Burns, says not to worry, that they have secured $1.4 billion of pre-orders for the endurance truck, but it turns out that their largest order comes from a company that has a non-binding letter of intent, which means they don't even actually have to pay for those trucks. They can back out at any time. They are not contractually obligated to buy those orders. This is where the CFA really starts talking bad about Workhorse. He says investors looking for long-term plays in the electric vehicle market have many great choices, but Workhorse isn't one of them. I would say that's yet to be seen, but I do admit that their sales in Q2 came in just $91,000, while cash burn topped $17.7 million, and they only have $26.2 million left in the bank, which means that they can only survive 2 more quarters. The CFA goes on to say that investors desire to find the next Tesla, but if Lordstown SPAC IPO hits the right notes, that Workhorse stock will rise regardless of their actual business outcomes, outlook, or finances. This is where he very intricately calls people stupid if they hold Workhorse for long term. He goes, smart investors, however, will look for better choices in the promising electric vehicle industry. That's because at current trends, they'll quickly realize that Workhorse stock is worth precisely zero. I don't agree with him here. I would say that we don't know the potential of Workhorse yet, because even if they don't get the United States Postal Service contract, their technology and patents are still very, very good. That's all I have for you guys today. I'll see you in the next YT video.